All right, what's going on, everybody? So today I will be going over the charts, starting from the daily time frame for the market GBP JPY. Okay. Now, as far as the fundamentals are concerned, we do know that we are near previous high in 2021 at around 158 flat. But as far as the news is concerned for the week ahead, for the week of January 9th to January 15th, we do have bank holiday for the yen on Sunday. We do have Fed Chair Powell testifying on Tuesday around 2 a.m. So New York session traders, be on the lookout for that. We have CPI news on the 12th, which is Wednesday. Unemployment claims coming out on Thursday, and Friday we got retail sales. Now it is a packed. It's not that packed compared to last week because, of course, last week was NFP, first NFP week of 2022. But this week we do have a few fundamental, red folder type news to be on the lookout for. Okay, so I'm just gonna keep it short. Check out any type of news outlet that you use to look over your fundamentals. But right now you can find most of this information straight from forexfactory.com. I do know people use CNBC, people use anything at investing.com, whichever source of information or source that you go to get your information. Make sure you take, Sundays or even early Mondays to take a look. Just watch over, even if you're not a fundamental trader, just so you can understand why you might, see some outbursts in volume in the market. And you may say, oh, it's manipulation. But it could just be a short-term burst for some recent news release. Okay, so always be vigilant of what's going on. Okay, so without further ado, let's go ahead and hop right into the charts. As you can see, I am looking on the daily time frame right now. Now, I'm not going to go to the monthly, the weekly, or anything like that, because I'm mainly looking for intraday moves and looking to capitalize on that from the GJ market. Okay, so as far as the daily time frame is concerned, we do see that 158 is an area that we're probably going to run into. Now, we're not too far from there, or we almost claimed close to it about 3 days ago on January 5th. We didn't necessarily tap into that area, but as you can see, we came just slight of actually tapping into that area. If we were touching the high of the extreme price here, which is, I don't see my figures on there, but yeah, essentially, if we were tapping into this area, we'd have, of course, seen it. Okay, so we didn't actually tap into that point. There it goes. I was waiting to see my actual OHLC values. Anyways, so the highest price tested here was, okay, can't see it. Let's try one more time. And I'm just going to go right over here. I'm looking at the OHLC values right over here. So the highest price, sorry, the highest price tested here was 158.222. Really cool number. Anyways, we didn't actually tap into that price, but we came really short of it. And then the market started coming back for a retracement, which is, natural market movement. Now, what I'm really primarily focused on when it comes to GJ for my intraday setups is really the 4-hour time frame. So let's go ahead and hop over to the 4-hour time frame and take a look at some possible key areas for us to look into. So, of course, towards the end of the year in 2021, the market just started, of course, we had this bit of consolidation around this area over here. The market was really just kind of stuck inside of a range. But once we were able to break out of that range, we started to see the market, or this market specifically, start to trade in the direction that we were looking for. Started seeing a lot more high highs and higher lows after breaking this region. Now, when it did that, and I was able to, capitalize on some of this move, I did also start to think to myself, well, we're creating some inefficiencies in this market. And because of that, we may come back for a slight retracement. Now, where could we find retracements at? And those possible areas is what you see on my chart here. These blue zones essentially are 4-hour levels where we possibly may come back for a retracement. We've already started to see a shift in actual price from the high here after coming short of the 2021 all-time high. We kind of came just slightly short of it. And now what could we possibly see happening? Well, again, if the market is to possibly come back into this area, let's say if we reinvest back into this supply zone, obviously marked as a supply from this strong sell-off, minor strong sell-off on the lower time frames, right? A little bit strong on the lower time frames. But let's say if we reinvest back into this zone, where could we possibly find some support to essentially ease some of this strong impulse leg that we had to the upside? Where could we possibly find some retracements? Well, there are many areas that we can find retracements. We may find some support around this area, around 155, 150 or so, for a move back up to continue. There's several areas, but let's just entertain the possibility that we may come back into this zone, and it will be from this area that we find some support, or maybe even as low as this when we come back into 153 areas before we start to trade, a little bit higher. All this is speculation, but we're essentially trying to say, okay, where could we possibly find some support before the market starts to essentially continue this previous leg that it had here? Because obviously, even if we look on a much higher time frame, we know that this market specifically has been in an uptrend since the all-time low back in March of 2020. Now, this daily level that we had here was a key level for 2021. 2021, this key level around 148, 460, that was a key level that we could not break in the GJ market. Anytime we came over here, it was almost automatic that if we came into this zone, the market was going to look to start to pivot back up. Now, when we came here, we did spend a lot more time than we have in the past around this general, 149, because that was really the level everyone was taking a look at. That 149 whole figure was the area that everyone was focused on a daily time frame. We spent a lot of time there between November, towards the end of November, through December. We spent a lot of time there. We did have a shift from this, consolidation area here, where we were essentially, kind of creating this general zone where it looks like we were exhausting. Let me go ahead and try to show you a little bit. It looked like we were exhausting. Of course, we were creating these lower wicks, essentially these lower shadows on a higher time frame. We can obviously see that there are candles here. And it looked like we were exhausting. Sellers were having a hard time bringing the market below 149. But eventually we had a strong momentum shift from this general area of resistance. Once we did that, it looked like we were primed to possibly hold 150 for a move higher. But unfortunately, we weren't. In fact, we came much lower to reinvest back into these lows that we had here. Once we were able to essentially clear some of these lows, then that's when we saw the move up. So this is essentially where the move began. Now, our Fibonacci traders, of course, are looking at this with their tongue out and just like, yes, they're essentially looking for a retracement of an impulse leg, because that's what Fibonacci is all about. Wrong tool. Let's try that one more time. So let's go ahead and try using the Fibonacci tool here. If we extend this from the all-time low around this area here, or the low to the high, right? Relative low to the relative high, and we extend the Fibonacci level out, where could we possibly see a retracement? Again, I'm not primarily a Fibonacci trader, but where could we possibly see these areas of retracement? Of course, a 50% Fibonacci retracement is basically back to this lower blue zone that I have, generally around this area. And this is very important. So some people who trade Fibonacci believe that the market's going to pivot exactly at these Fibonacci levels. No, remember, any type of technical horizontal level that you have, which I call static levels, any type of static level that you have in your chart is not a fixed level where the market has to pivot. It's more of a zone. So if the market was to, let's say, trade a little bit below this, will I still consider this a 50% Fibonacci retracement? Yes. Why? Because this is a zone, not a specific area where it should pivot from. Okay. Always look at it from that perspective. Another area over here, 61.8, one of those golden ratio points that a lot of people are going to be looking for a retracement. We do see that there was a bit of a break of this previous resistance. We came back for a retest before we moved up. So could we possibly come back to this area, which was where we had the initial breakout from this consolidation or around this area? That our initial high point of that breakout, could we possibly come there to find some support for this previous impulse leg to be corrected and then for us to continue? Yes. Now, am I trying to call the top of the bottom? No. What am I trying to do? Essentially, what we're trying to do collectively is we're trying to essentially guesstimate in a way, right? Where could the market possibly come back for a retracement? What are these zones essentially? How are we treating these zones? We're essentially treating them as areas of where possible, batches of buy limits possibly exist in the market. Because essentially buy limits are what, kind of form the areas where there's pockets of liquidity. And of course, direct market execution orders are what actually moves the market, where you actually have people executing orders, where a buy limit or a sell limit turns into an executed order once that order is filled. Okay, so direct market execution orders are going to essentially drive the market. So these zones are essentially possible areas, as far as technical analysis are concerned, possible areas where there could possibly be pockets of liquidity for an area, for a possible reversal area. Okay, so again, there are many areas that we could possibly pivot from. These are the areas that I'm essentially looking at. Am I looking this far down? I haven't marked it, but let's go ahead and entertain that we could possibly come back where there was previous resistance and we establish a very, very, very low time frame support. Could we come back into this area for a possible reversal? Definitely. It's a technical level, which we've already used as a previous support. And then it became a resistance at one point, then it turned back into a support. Could that be an area for reversal? Definitely. So, we'll take a look at it, we'll entertain it. We also know that based off the Fibonacci, it's somewhat around like a 61.8 Fibonacci retracement. Let's take a look to reconfirm that. So let's try that one more time. Let's just take a look. So yeah, somewhere between 61.8 and 70.5. So some people use, 71. It's kind of that hidden Fibonacci level. Could we possibly come into this zone before we start to pivot back up? Yes, definitely. So we also want to be taking a look at that, but also put into your mind that if we do retrace this much, then essentially the yearly candle from a much higher time frame would have flipped from bullish, because this is where the year began, would have flipped from bullish, and now we would essentially be trading bearish, right? On a yearly time frame, once we do have this rollover from this general supply zone, anywhere that we come into, this will essentially be the bearish area before we start to again trade higher. Now, we do know there are several areas where this market can find potential support for a move higher. Several areas. So we're going to be looking forward to that for a possible move back. As bulls in this market, we'll be waiting for those potential retracement to continue trading from the much higher time frame analysis, because we do know on the monthly, weekly time frame we are bullish on this market. This could be just a minor retracement. Now, let's go look on the lower time frame to see if the market has already started breaking down, and in fact it has. And this is essentially the last statement I will make on this market, and then just take some time to take a look at this. But let's take a look at something interesting on the lower time frame. I did say take a look at this momentum shift that we've already had as far as market structure is concerned. Let's take a look on the 30-minute time frame. Looking at the 30-minute time frame, take a look at market structure. Okay, so we do know that this is essentially a higher low zone that we had. This was a minor higher high. Market came for a higher low, came back for a higher high point. We pulled back for a higher low, and then we established our most recent higher high point. Now, when we take a look at this higher high point, take a look what happened last week. I believe this happened during Asian session from Thursday yeah, during Thursday, I believe this is when it started happening. Let me put on my period separators because I'm getting a bit confused. So let's take a look, turn on those session breaks. And there it goes. Perfect. So yes, this was Thursday when we broke down, and this is of course Friday because we haven't flipped on to the next day. And of course, this is Saturday. So of course, markets close. So again, higher high, higher low, higher high. Now we have essentially broken that previous higher low. Would I call this a breakup structure just yet? I don't like to call breakup structures until we start to trade back into these areas, but that's not really that important. What are we essentially looking at right now? What I'm essentially seeing is that we have broken this minor higher low area, or it's more of a major higher low area. You can see we reacted very strongly off of it. We have broken that structure. So now what are we doing? I think the market is in a corrective phase as examined by the low volume. You had really strong high momentum moves the previous day. Now you have a whole bunch of very small low volume candles. So this is what I would consider the corrective phase of the market. As far as GJ is concerned, on the 30-minute, it is in a corrective phase. Once that corrective phase is over, then we're going to start the new trend. If we continue this shift that we had, what would the market possibly be doing? It would essentially be going back to break these little higher lows that it had during the correcting phase. It would again collect these areas, which breaking that low, coming back into our first area where we could possibly find some interest for a reversal back up. Okay, that would be the first zone. Now, could there be a strong reaction to feed all the way back into the supply zone? We're not sure. We're going to let the market tell us what to do. But that's what we're seeing on the lower time frame. And of course, this will line up with our higher time frame analysis. If this correction phase then breaks down, it comes back into our first buy limit zone where we start to look for possible reversals of this move, right? Of this move down, we look for a possible reversal in this area, look for possible reversals here, here, and lower. If we start trading much lower than that, then we do, obviously, we're more bullish in this market, so we're not looking for sales, but we do know where possible intraday levels could possibly be. Now, are there going to be buying opportunities if we break much lower than here? Yeah, of course. We may even find support right off this level. Now, I'm not marking this level because I do know that this is where the structure was broken. So this is not really a higher low structure point. I'm not expecting a strong reversal here. If we do get it, then of course I would be looking for some buys above this area. I'm not going to entertain the sells in this clip, but that is what I'm looking for the week ahead. So take some time, go over this, look over it. Let me know if you have any questions. This is free game for the community. Happy trading week for the week ahead. And remember, look out for the news. We do have some things that are very important for the week ahead. We just put NFP behind us. Very, very, very profitable for that week, for the previous week. So let's keep the momentum going for the week ahead. All right. Peace.